inflation is not going away, because inflation is not about the low rates. The Fed created inflation to make the rates low because it had to print money to buy all the bonds to suppress the rates. But what's really driving the process is government spending and the massive deficits that it produces that have no other means of financing other than inflation, the Fed. And we just raised the debt ceiling with no real cuts to government spending. The deficit is going to explode over the next 2 years, 4 or 5 trillion, maybe more. So inflation is going to get worse from here. It is not going to get better, despite the fact that the Fed has hiked rates. And in fact, those rate hikes are now working their way through the cost structure of business, just like higher wages or higher raw material costs or higher rents. And so ultimately, higher rates are just going to be part of the price increases that get passed on to consumers. And that's one of the reasons that the CPI in the future is going to be higher than it is now.
When you look at the CPI, obviously it is a 12-month kind of year-over-year measurement. It has been coming down. What's interesting about that is a 12-month measurement. But if you look month over month throughout 2023, we actually see an acceleration. There's been positive growth month over month of that inflation measurement. If you then go and you look at something like Trueflation, which is an alternative method, they estimate that inflation is actually somewhere around 3%. If you talk to someone like a Barry Sternlicht, he thinks that inflation on the headline number will be negative or around 0% sometime this summer. What's your take on where inflation is today, and where do you think that it'll go through the rest of this year?
Well, first of all, we have so much inflation in the pipeline because of 12 years of money printing, right? That's the inflation. The reason that the year-over-year numbers have come down is just because of the comparisons. We had such a huge increase in prices the prior year that on a year-over-year basis, at some point, you're always going to get a improvement because of the comparisons. The problem is, going forward over the next year, you're not going to have those same comparisons. So it's going to be much easier later in 2023, early 2024, to have year-over-year numbers that are much worse. But if you look at the month-over-month numbers, just if you annualize each month in and of itself, we're still showing prices increasing over the prior month at an annualized rate of 5%, 6%, 7%. And this is cumulative. This is on top of the price increases that have already taken place. You know, people were complaining about, oh, prices went way up. Well, they keep going up. That means that the stuff is getting even more expensive. Prices aren't coming back down. We are not reversing any of the inflation from 2021, 2022. We're adding to it. And there is no path at all forward for inflation to come anywhere near 2% or stay there, right? Those days are long gone. We're permanently now back in a period where CPI, unless they find a way to completely redo the index again so it can, hide the inflation to an even greater degree, we're looking at inflation at a minimum, probably 4, 5, 6% kind of trough, and then potentially much higher than that. So living in this world is very different from the world where inflation was below 2%, because you're in a whole new reality in that situation, and that requires new interest rates, new gold price. But when the U.S. government is confronted with an interest rate that reflects that higher level of inflation, it's impossible to finance. Even right now, interest rates are about consuming almost $1 trillion a year. We're close to $1 trillion a year in interest in the national debt. When you and I had that conversation that you're talking about, it was maybe $300 billion a year. Now you're talking $1 trillion. In a couple of years, if the Fed has to keep raising rates, let's say they get to 6 or 7%, but more and more of the short-term debt has a chance to roll over. Plus, we have to add to that all this new debt that we're going to borrow. In 2 or 3 years, it could be $2 trillion a year in interest on the national debt. Where is this money going to come from? The U.S. government only collects about $4 trillion in taxes. How can 50% of tax revenue go to interest on the debt? Right? That's like somebody that earns $100,000 a year. They have to spend $50,000 a year paying the interest on their credit cards. You can't survive with that type of interest expense. So we are headed for a debt crisis, a sovereign debt crisis, and a currency crisis. That's real. What we just went through with the debt ceiling, that was fake.
What happens in a sovereign debt crisis or a currency crisis? What are you expecting to kind of be prepared for?
Well, that's where you see a collapse of treasuries. Nobody wants to buy treasuries because the yield is not high enough to offset for inflation. And so then the Fed has to print even more money to buy the treasuries that nobody else wants. And then an already elevated inflation rate starts to spiral out of control. And now you're talking hyperinflation. And so that's the risk. And then what happens there? Well, the dollar is imploding in value. The cost of living is skyrocketing. Then what does the government do? Well, then they panic and they impose like price controls, exchange controls, all sorts of desperate measures to try to prevent, prices from spiraling out of control. And then you end up with shortages. You end up with long lines for basic necessities. You end up with black markets. And so you turn honest Americans into criminals because the only way they can buy stuff is if they do it illegally, right, on the black market. So a lot of this stuff is going to happen as a result of the fact that politicians do not want to accept this responsibility for what they've done, level with the American public, and make the tough political choices that are actually necessary to rein this problem in before it gets out of control, which means huge cuts to government spending and telling a lot of people that they're not going to get what they were promised. Now, they're not going to get it anyway. It's just that the politicians won't tell them that. They're just going to inflate these obligations away. And so, yes, you're going to get your Social Security benefits. They just won't be worth anything when you receive them.
So if you listen to somebody like Stanley Druckenmiller, he's saying exactly this, right? There's all these things that the U.S. government has promised, whether it's Medicaid, Medicare, or various other programs like Social Security. He believes that we have to have a talk now about cutting entitlements. And if we don't, then we're going to have to do it later. And it's not really going to change. So it's better to do it up front rather than wait. It sounds like you agree with him that we should cut entitlements and just have that hard conversation today.
Well, yeah, I mean, it's not, we can't just talk about it. We've got to actually do it. But I think that there is no politically viable way to make meaningful cuts in entitlements without also making meaningful cuts in other parts of the budget. We have to make meaningful cuts in defense, right? And I don't think that we should leave our creditors unscathed, the bond market. I think that there should be a shared suffering among everybody who is owed money by the U.S. government. I mean, just like in any bankruptcy, you can't take certain creditors and say, well, you guys are going to be made whole and we're going to, make everybody else pay. So I think that we should restructure the debt and we should tell people who own U.S. treasuries, which of course would include the Japanese, the Chinese, right, the Saudis, everybody. You know what? We don't have the money to pay you back. And so we're not going to do it. Now, we're not going to give you nothing. We're going to give you something, but it ain't going to be 100 cents on the dollar. I mean, we've got to spread the pain because I don't think people on Social Security are going to accept the fact that they're not going to get their money, but we're going to prioritize the Chinese and give them all theirs. So I think there's got to be some kind of acknowledgement that we're broke. And everybody has got to take a haircut on what they've been promised. And if that means that we end up with a lower credit rating, well, we get a lower credit rating. That doesn't bother me.